What if I told you that the difference between a 10% gain and a 300% life-changing profit comes down to recognizing just one specific pattern on your charts, a pattern that reveals massive market trends before they explode into mainstream awareness? Most traders spend years jumping from strategy to strategy, indicator to indicator, searching for that elusive edge that will finally unlock consistent profits. They study complex algorithms, subscribe to expensive services, and consume endless content promising the secret formula. Yet they continue to struggle with the same devastating cycle, spotting promising opportunities, taking positions, and then watching in absolute agony as stocks they sold too early skyrocket without them. Has this ever happened to you? You identify what looks like a solid setup, you enter the trade, and within days or weeks you're sitting on a modest 8%, maybe 10% profit. That voice in your head starts whispering, "Take it now, lock in the gain before it disappears." So you sell, feeling smart and disciplined, pocketing your small win. Then something gut-wrenching happens. That same stock continues climbing, 15%, 30%, 50%, eventually 200% or 300%, and you're forced to watch from the sidelines as what could have been a fortune-building trade becomes just another what-if story you replay in your mind. The painful truth is that this isn't a problem of analysis or intelligence. It's a problem of recognition. You're missing the early signals that separate temporary price fluctuations from genuine wealth-creating trends. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. What you're about to discover might surprise you, because mastering massive market trends isn't about having more indicators, faster computers, or insider information. It's about training your eye to see one specific chart setup that acts as a filter, cutting through the noise and revealing only those opportunities with genuine momentum behind them. The kind of momentum that comes from institutional accumulation, fundamental shifts, and the early stages of price movements that can multiply your account several times over. Stay with me until the end, because I'm going to walk you through exactly how this single pattern has helped traders identify stocks before they make their major moves. And more importantly, how it provides the confidence and conviction needed to hold through the inevitable pullbacks that shake out everyone else. This isn't just another technical indicator to add to your cluttered charts. This is a complete framework for spotting trends during the exact moment when skepticism is highest and prices are still within reach, before the financial media catches on, before your neighbor starts asking about it, and before the majority of market participants recognize what's happening. The question isn't whether you can spot these opportunities. The question is whether you'll recognize them when they appear, and whether you'll have the discipline to act on them. The transformation that happens in a trader's journey isn't marked by discovering some secret indicator or exotic strategy. It's marked by a single revelation: understanding that the market itself is constantly communicating what's about to happen next, but most people simply don't know how to listen. This chart pattern I'm referring to acts as your translator, filtering out the deceptive noise that causes premature exits and highlighting only those setups where genuine momentum is building beneath the surface. Think about what typically runs through your mind when you're sitting on an open position with a decent profit. There's this internal battle between greed and fear, between holding for more and protecting what you have. That whisper telling you to take profits now before they disappear isn't wisdom. It's anxiety disguised as prudence. The hidden truth is that wealthy market operators experience these same emotions, but they've trained themselves to make decisions based on what the chart is actually telling them, rather than what their nervous system is screaming at them. Behind the scenes of every fortune built in the markets, you'll find the same pattern. Individuals who learn to distinguish between temporary pullbacks and genuine trend reversals. They understand that prices never move in straight lines, that healthy trends breathe and fluctuate, and that these natural movements are designed to shake out the timid while rewarding the informed. This isn't about having stronger nerves or being more courageous. It's about having a framework that removes the guesswork and provides objective confirmation of trend strength. What separates these successful operators from everyone else isn't complexity, it's clarity. While most traders are layering their charts with dozens of indicators, creating a maze of conflicting signals, the professionals are watching for one specific alignment of price action and momentum that has historically preceded major moves. This setup doesn't require you to predict the future or outsmart the market. It simply reveals when institutional money is quietly accumulating positions and when that accumulation is transitioning into markup phase, where prices begin their sustained climb. The impact of understanding this distinction cannot be overstated. It's the difference between exiting after a 10% move and riding that same position to 100%, 200%, or even 300% gains. It's the difference between a lifetime of modest trades that never quite add up to anything substantial and catching just 2 or 3 massive trends per year that completely transform your financial reality. Now, I want to go even deeper into this topic by showing you exactly what this pattern looks like and why it works so consistently across different markets and timeframes. The psychology behind why most traders miss these setups entirely reveals something profound about how human nature works against success in speculation, and once you see it, you can't unsee it. If you've ever felt that frustration of selling too early and watching your stock continue without you, write in the comments, "I left too soon." Here's something that might fundamentally shift how you approach your entire trading journey. The relentless pursuit of constant activity is precisely what keeps most people trapped in mediocrity. Modern trading culture bombards you with notifications, breaking news alerts, and endless can't-miss setups that create this suffocating fear of missing out. But ask yourself honestly, would you rather execute 50 trades that each net you a modest 2% gain, or would you prefer to identify and capture just one powerful trend that delivers a 100% return? The mathematics are straightforward, but the psychology behind actually choosing the second path is where most people stumble. If this approach resonates with you, hit that subscribe button. We explore these deeper market insights in every video, helping you develop the skills that actually create consistent results. The hidden truth about wealth accumulation in markets is that it doesn't come from being constantly engaged, constantly trading, constantly doing something. It comes from periods of intense focus when conditions align perfectly, followed by disciplined patience while that position develops its full potential. Think about the consequences of this mindset transformation. Instead of scattering your capital and attention across dozens of marginal opportunities, what if you develop the discernment to wait for those rare moments when multiple factors converge? Technical patterns, fundamental catalysts, institutional interest, and momentum all pointing in the same direction. These convergences don't appear every day or even every week, but when they do materialize, they often signal the beginning of those life-changing moves that define your year or even your decade. The journey toward this selective approach requires you to resist the cultural pressure that equates activity with progress, that mistakes constant movement for accomplishment. Behind the scenes of every substantial market fortune is someone who understood that less is often more. Now, I want to go even deeper into this topic by exploring a powerful metaphor that completely changed my relationship with market movements. Imagine the market as a massive river with currents flowing in different directions at different times. Some currents are weak and temporary, moving sideways or circling back on themselves. Others are powerful and sustained, carrying everything in their path toward a definite destination. Most traders spend their entire careers fighting against these currents, exhausting themselves while making minimal progress. They're convinced they know where the river should flow based on their analysis, their opinions, or what they read in the news, so they paddle frantically against the actual direction of the water. The transformation begins when you stop trying to impose your will on the market and instead learn to identify which way it's genuinely flowing. This chart setup essentially becomes your navigation system, revealing the direction and strength of these powerful currents before they become obvious to everyone else watching from the shore. The impact of this shift cannot be overstated. Suddenly you're being carried along by momentum rather than fighting it, positioning yourself in alignment with forces far larger than any individual trader. If you're starting to see how fighting the market has been costing you opportunities, write in the comments, "Flow with the current." There's a revelation that completely transformed my approach once I internalized it, and it might liberate you from one of the most destructive habits in trading: the obsession with perfect entries and exits. This fantasy of buying at the absolute bottom and selling at the precise top isn't investor wisdom. It's a gambler's delusion that causes more financial damage than almost any other misconception. Think of it like trying to board a train at the exact moment the doors open versus waiting to see that the train is definitely moving in your intended direction, then calmly stepping aboard while there's still plenty of journey ahead. The wealthy operators understand something profound that eludes most market participants. They're not interested in bragging about catching the exact low or selling at the peak. They're focused on capturing what I call the fat, juicy middle of the move. That substantial portion where momentum has been confirmed, risk is significantly reduced, and yet enormous profit potential still remains. The beautiful paradox here is that by surrendering the dream of perfect timing, you actually increase your probability of substantial gains because you're no longer entering prematurely or holding stubbornly through obvious reversals. Behind the scenes of every major trend, there's a period where the market quietly reveals its intentions to those paying attention. These aren't loud, obvious signals that everyone can see. They're whispers, subtle patterns in volume behavior, contractions in volatility that precede expansion, and shifts in sector leadership that suggest where institutional capital is rotating. This chart setup essentially decodes these whispers, translating the market's early language into actionable insight before the news headlines catch up and the general public starts paying attention. Consider the hidden truth embedded in this process. By the time a trend becomes comfortable to participate in, by the time your friends are talking about it and financial media is featuring it, the most profitable portion has typically already occurred. The transformation in your results happens when you develop the ability to recognize these early breadcrumbs while skepticism still dominates sentiment. It's during these periods of doubt and disbelief that positions established offer the greatest risk-reward ratios. The impact of learning to read these whispers extends beyond just better entries. It fundamentally changes your relationship with market movements, because you're no longer reacting to what's already happened. You're anticipating what's beginning to unfold. This elevated awareness creates a tremendous edge that compounds over time as you witness pattern after pattern developing exactly as the early signals suggested. If you've ever noticed something forming on your charts but hesitated to act on it, write in the comments, "I saw the whisper." Here's something that might completely reshape your understanding of where profits actually come from in markets. The real money isn't made during the active moments of buying and selling. Wealth is created during the waiting, during those uncomfortable periods, after you've taken a position based on solid analysis. And now the market needs time to validate your thesis. This revelation runs contrary to everything modern trading culture promotes, where constant activity and rapid-fire decisions are celebrated as signs of expertise. The hidden truth is that the hardest work in speculation has nothing to do with technical analysis or chart reading. It's cultivating the emotional resilience to sit still while your position develops, to resist the urge to constantly tinker and adjust, to ignore the noise that will inevitably try to shake you out. I remember watching a position climb to 30% gains and feeling that overwhelming urge to lock in the profit, to feel smart and validated. But every signal that put me into that trade was still intact. The trend remained strong, volume patterns were healthy, and institutional accumulation continued. The most difficult decision I ever made was doing absolutely nothing, just sitting on my hands and letting the position work. That single act of disciplined patience transformed a 30% gain into something exceeding 300%. The journey toward this level of conviction requires you to understand something fundamental about how trends actually develop. Prices never ascend in straight lines, like an elevator shooting toward the top floor. They move like someone climbing stairs, advance, pause, or pull back slightly, then advance again to higher ground. These natural fluctuations serve an essential purpose in market ecology. They shake out the weak hands, the timid traders who mistake every healthy correction for a complete reversal, surrendering their positions to those with deeper understanding and stronger conviction. Behind the scenes of every substantial trend are these moments of doubt where most participants exit prematurely. The psychological impact of watching your unrealized gains temporarily shrink triggers primal fear responses that override rational decision-making. This is precisely where the chart setup provides its greatest value, not just in identifying the trend initially, but in giving you specific parameters to distinguish between normal retracements that are part of the trend's natural rhythm versus actual reversals that signal it's time to exit. The transformation in your trading results happens when you develop the perspective to see these pullbacks as opportunities rather than threats, as the market's way of building energy for the next leg higher rather than signs of failure. If you've ever sold during what turned out to be just a temporary dip, write in the comments, "I learned this lesson." One of the most liberating revelations you can experience as a trader is understanding that you don't need to catch every move to achieve extraordinary success. In fact, the desperate attempt to participate in every market opportunity is exactly what traps most people in a cycle of mediocrity and exhaustion. The hidden truth is that just one or two significant trends per year, properly identified and ridden to their natural conclusion, can completely transform your financial reality. This insight removes an enormous psychological burden because you're no longer pressured to have an opinion on everything, to be constantly positioned, or to feel like you're missing out when you're sitting in cash. Think about the impact of this mindset shift on your daily experience. Instead of frantically monitoring dozens of positions and feeling anxious about every market fluctuation, you develop the patience and discernment to wait for those rare, perfect setups where everything aligns in your favor. These moments don't announce themselves with fanfare. They emerge quietly during periods when most traders are distracted or discouraged. But when you recognize them through this chart pattern, you can allocate your capital and attention with conviction rather than spreading yourself thin across marginal opportunities that never quite deliver meaningful results. Now, I want to go even deeper into this topic by addressing something that might completely change how you view success in markets. You can be wrong half the time and still accumulate substantial wealth. This isn't theoretical, it's mathematical reality when you understand the fundamental principle that separates consistent winners from perpetual strugglers. Success doesn't require perfection or some impossibly high win rate. It requires discipline in managing the relationship between your winners and losers. Behind the scenes of every trading fortune is this same pattern, keeping losses small when you're wrong, while letting winners run to their full potential when you're right. Most traders operate with the inverse approach. They cut winners short to avoid the pain of watching profits evaporate, while holding losers indefinitely hoping they'll eventually recover. This deadly combination guarantees mediocrity, regardless of how good your analysis might be. The transformation happens when you internalize that being wrong isn't the problem. It's how you respond when you're wrong that determines everything. When you implement proper risk management and position sizing, combined with the discipline to exit quickly when the market proves your thesis incorrect, those small losses become insignificant compared to the outsized gains from the few positions that develop into major trends. If you're beginning to understand that win rate matters far less than the size of your wins versus losses, write in the comments, quality over quantity. There's a profound irony at the heart of why intelligent, hard-working people struggle in markets, and it has nothing to do with lack of knowledge or analytical skills. The uncomfortable reality is that our own human nature actively sabotages our success. The very evolutionary programming that helped our ancestors survive in dangerous environments becomes our greatest liability when applied to market speculation. We're hardwired to run toward what feels good and away from what feels painful. But in the trading arena, this instinct consistently leads us in exactly the wrong direction. Think about what happens psychologically during typical market cycles. When prices are rising and everyone around you is making money, that's when greed intensifies and caution evaporates. You feel compelled to jump in, to increase position sizes, to throw risk management out the window precisely at the moment when danger is highest. Conversely, when markets are declining and genuine opportunities emerge at depressed prices, your fear paralyzes you. Every instinct screams to stay away from what others are desperately selling, even though this is exactly when the greatest fortunes are positioned. The hidden truth embedded in this struggle is that simply reversing these natural tendencies immediately puts you ahead of the vast majority of market participants. The transformation isn't about becoming emotionless or suppressing your humanity. It's about developing enough self-awareness to recognize when your instincts are leading you astray and having a framework that provides objective guidance instead of emotional reactions. This chart setup serves precisely that function, acting as a buffer between your primal impulses and your actual trading decisions. Now, I want to go even deeper into this topic by exploring what actually drives these trends we're trying to capture. Behind the scenes of every significant price movement are real forces at work. This isn't random noise or lucky accidents. Trends emerge from fundamental drivers like changes in company earnings trajectories, shifts in supply and demand dynamics, alterations in monetary policy, or waves of institutional capital being deployed strategically. The beauty of this approach is that you don't need to predict these drivers in advance. The chart itself reveals their presence through specific volume patterns, momentum characteristics, and price behavior that indicate smart money is accumulating positions. If any of these insights shifted your perspective, hit that like button. It helps this content reach other traders who are ready for this level of understanding. These footprints of institutional activity appear long before the financial media reports on what's happening, before quarterly earnings. Confirm the shift before the general public becomes aware. By learning to recognize these early signals, you're essentially reading the intentions of the market's most sophisticated participants and positioning yourself alongside them rather than against them. If you're realizing that trends tell a story beyond just price movement, write in the comments, "Following the smart money." The difference between traders who consistently capture these trends and those who simply identify them often comes down to something surprisingly simple: having a clear plan established before risking any capital. Most people fail not because their analysis was wrong, but because they operate on feelings rather than rules when the market starts moving. They enter positions with a vague sense that something looks promising, but without any concrete parameters for how they'll manage it. This ambiguity creates a vulnerability that the market ruthlessly exploits, forcing you to make critical decisions. During moments of maximum emotional stress, the transformation begins when you define your boundaries in advance, knowing exactly where you'll exit if you're wrong, understanding precisely what conditions would invalidate your thesis, and establishing clear criteria for when to take partial profits versus letting the entire position run. This preparedness doesn't just improve your results, it fundamentally changes your psychological experience. You're no longer trapped in that agonizing internal debate during every price fluctuation because you've already decided how you'll respond to various scenarios. The chart setup provides these exact parameters, removing the guesswork and replacing it with objective rules that protect you from your worst impulses. Now, I want to go even deeper into this topic by addressing perhaps the most challenging aspect of catching major trends early. The uncomfortable reality is that significant wealth-creating opportunities rarely come from following the crowd. By the time your neighbor is talking about a stock, by the time financial media is featuring it prominently, by the time it feels safe and comfortable to participate, the most explosive portion of the move has typically already occurred. Behind the scenes of every fortune built from trend trading is this same pattern: someone who was willing to act when it felt uncomfortable, when their judgment diverged sharply from popular opinion. Think about the psychological weight of this requirement. You're placing real capital at risk based on analysis that contradicts what most people currently believe. That takes tremendous conviction and clarity of thought. The hidden truth is that this discomfort you feel when acting against consensus isn't a warning sign that you're wrong. It's often confirmation that you're early to something significant. The market rewards those who can recognize emerging patterns while skepticism still dominates, who can see what the chart is revealing, even when the narrative hasn't caught up yet. This willingness to stand apart from the crowd isn't about being contrarian for its own sake. It's about developing the independence of mind to trust your framework when others don't yet see what you're seeing. If you understand that the best opportunities often feel the most uncomfortable, write in the comments, "Comfortable is expensive." If you've made it this far, you're clearly not just looking for quick tips or surface-level strategies. You're on a genuine journey toward understanding how markets really work and what it actually takes to capture those life-changing trends before they become obvious to everyone else. That tells me something important about you. You're willing to invest the time to develop real skill rather than chasing shortcuts that never deliver. This is exactly the kind of depth we explore in every video on this channel, and if this approach resonates with you, I'd genuinely appreciate it if you'd hit that subscribe button. The community we're building here is focused on substance over noise, on understanding the psychology and mechanics behind consistent success, rather than just collecting indicators and techniques. If this conversation shifted something in how you think about trading, if any of these revelations connected with where you are on your own path, leave a comment and simply write, "I'm capturing the middle." It helps me understand what's landing with you and keeps this dialogue going beyond just the video itself. And if you found value in what we covered today, a quick like on the video means more than you might think. It's how content like this reaches other traders who are ready for this level of understanding, who are tired of the surface-level advice that saturates this space. There's another video right here that builds directly on what we've discussed. It dives into the specific mechanics of position sizing and risk management when you do identify these major trends, because recognizing the opportunity is only half the equation. Click on that and let's continue this conversation over there. I'll see you in the next one.